In Babylon, over 4,000 years ago, merchants carved trade risks into clay tablets. In 1762, in London, the first actuarial mortality table was published. For centuries, humans calculated risk. Slowly, deliberately, transparently. They built models on paper and trust in principle. Today, machines do it, at the speed of light, without hesitation, without explanation. They decide if you get a loan, how much you pay for insurance, whether you're flagged as a fraud risk, but who owns the risk? Traditional actuarial models were built on clear assumptions. You could challenge them, you could audit them. But today's AI models, built with millions of parameters, invisible, untouchable. As Boston Consulting Group puts it, AI systems can replicate and amplify human bias at scale while hiding it behind complexity. Translation: bad decisions, faster, and harder to see. In 2021, researchers at the University of California, Berkeley, found that mortgage algorithms were up to 80% more likely to reject Black applicants, even with identical financial profiles. Because the model learned from history, and history isn't exactly neutral. In healthcare, it got even worse. A 2019 study published in Science revealed that an AI system used by U.S. hospitals prioritized white patients for extra care over Black patients with similar or greater needs, not because it was programmed to discriminate, but because it used past healthcare spending as a shortcut for healthcare need. Assuming that cost reflects need is not just wrong, it's dangerous. Bad assumptions. Hurt everyone. Or take education. In 2020, the UK's A-level grading algorithm downgraded nearly 40% of students, hitting public schools the hardest. An algorithm decided who deserved a future, and when it failed, the excuse was simple. It was an error in the algorithm. In 2011, the European Court of Justice ruled insurance companies could no longer use gender as a pricing factor. Before that, young men paid more for car insurance, because statistically, they were more likely to crash. The math was right, but the principle was wrong. Is it fair or correct? Not worth debating. My wife is watching. Since then, across Europe, insurance models must treat men and women the same. No shortcuts, no excuses. Because people aren't averages, they are individuals. And because innovation isn't just about faster models, it's about building a future where fairness is coded into every decision. Today, AI faces the same challenge, but actuaries have something rare, a tradition of modeling risk while protecting fairness. In a world of black box algorithms, actuarial values, transparency, auditability, independence, might be the most innovative tools we still have. We don't just calculate probabilities, we defend principles. And we know, diverse teams build better models. They see more, they question more, and they reflect more than just the past. Today, we track ESG metrics to measure a company's environmental and social impact. In AI, dozens of ethical metrics already exist: fairness tests, transparency measures, explainability scores. But adoption? Rare. Standardization? Still missing. Actuaries could help change that by building ethical AI models, frameworks that assess fairness, transparency, and auditability, turning ethical principles into measurable standards. Just as we set capital requirements and model life expectancy, we could define fairness thresholds, turning judgment into metrics and metrics into trust. According to the OECD, over 85% of organizations use machine learning in risk decisions, but fewer than 20% have formal ethical review processes. 85% use it, 20% check it. That's not a gap, that's a canyon. Maybe the real question isn't, can the machine predict the risk, but should it? And who is watching? The machine can calculate the risk. Faster, cheaper, colder, but only humans can carry it, because only humans can choose to care. In a world increasingly ruled by machines, the actuary's role is not just to model risk, because actuarial science isn't just about numbers. It's about building trust in a future that needs it more than ever. Man or machine? The answer is both, but only one can own the risk.